What is double entry accounting? I get this question pretty often from non-accountants. They think that accountants are maybe doing things twice. So let's explore. Just to recap what we did in our last video, because you're going to need this to understand double entry accounting. In our last video, we explored what a balance sheet was, and we saw that it was made up of assets, that's here in blue, which balances to our liabilities and our equity, that is the red side. And what is the blue side? What is the asset side? Simply tells us at a point in time what we have. And what is the red side? It simply tells us where we got the funds to have what we have at that same point in time. So I'm now going to represent an accounting transaction on the balance sheet. What is an accounting transaction? Simply something that happened in the business. For example, the business got a loan, or we bought equipment on credit, or we received an investment from shareholders. Those are all transactions. Now, accountants represent a transaction with a double entry. So I'm going to reflect the double entry with two colored stickers that have the same amount on them. And I'm going to put those colored stickers onto colored board pieces, which I'm going to call my accounts. And then I'm going to stick those on the balance sheet so you get the full picture of the double entry and why the double entry exists. So here we go. We got a loan of 25,000. So I'm going to put a blue 25,000 on an account. Here you can see this account, 25,000. And I'm going to call that account my bank account. I'm going to label this bank account. I'm busy scribbling here with my pen. Bank account. I don't know if you can see that, but that is our company bank account. That's where our money went. And I'm going to stick that into my assets over here. So you can see we have a bank account, which is sitting in the blue block in assets. But we've only done the single entry right now. It doesn't balance right now because we've only done we've only represented one leg of the transaction. I mentioned we got a loan of 25,000. So that would mean that we have a liability. We owe something. We owe the money back to the lender, which we'll have to pay back at some time in the future. So I'm going to put my red 25,000, my red sticker, into an account, into a red account, which is going to live here in liabilities. I'm going to call this my loan. Okay. And I'm going to stick this in liabilities. So there you go. You can see we have a bank account which sits in assets, and there's 25,000 in that bank account. But we also have a loan account which lives in liabilities, excuse my writing, which lives in liabilities. And now, having represented the double entry, we are in balance. My assets balances to my liabilities and my equity. We have 25,000 in money, and that's represented here. And where did we receive those funds from? We received those funds from a lender. The double entry allowed us to map the bigger picture of what happened and allowed us to see that we didn't just receive money from thin air. No, we received money from a lender and we owe that back to the lender. That has to be expressed here in the books of the company. And that is why we need the double entry to tell us more about each transaction, what got impacted, which different accounts got impacted as a result of what happens, in order to build a more complete, full picture of our books, of our financial position.